Hello and welcome to Crypto Weeklies. In this video, we are analyzing the social media related narratives related to crypto. None of the content is financial advice. Over the last 7 days, this chart again over available on cryptoweeklies.com. This is the home page. Under the narrative cloud section, this is the word cloud of popular narratives over the last 7 days on social media platforms related to crypto, Bitcoin, and FOMC related narratives garnering significant attention. Although the larger sentiment and the size of the bearish narrative is higher than those of the bullish narratives. Apart from Bitcoin, ETH, and Hedera and other cryptos such as XRP are garnering some attention. But if you go back to the homepage again and check the heat map of all of these cryptos individually, essentially every single crypto apart from Bitcoin Cash is major ones, that is in the last 24 hours has been down. Over the last 7 days, it's a 50-50 split, with some cryptos such as ETH, BitTensor, and Sheeb, and Tezos and Sol are rallying, but the others, again Bitcoin also up slightly 1.65%, but largely major cryptos are negative apart from the top 5 or 6 names. Over the last 30 days, apart from Bitcoin Cash, Maker, and XMR, every single major crypto is down. Over the last 90 days, again, apart from XMR and Maker, all of the major cryptos are down. So that means the performance has been lackluster over the last 90 days. If you were to look at some other metrics such as the crypto TLDR, which looks at the last 24 hours worth crypto related news articles, and it's based on the sentiment echoed in those articles, it classifies them whether it's largely bullish, which is in green color, yellow is neutral, and red is bearish. Overall, after analyzing these individual narratives, it collectively provides a sentiment between 0 and 100. Right now it's at close to 84, which is bullish. The higher the number, it's more bullish. Over the last 24 hours, the news related to crypto has been largely bullish. Individual risk meter for Bitcoin and ETH as of today, Bitcoin is somewhere in moderate risk regimen, ETH slightly high between 0.5 and 0.6. Others, it's kind of a hit or miss. BNB high risk, XRP is slightly low, Doge, ADA close to that high risk area, Link higher risk than most others. Bitcoin Cash slightly lower risk at this point. Litecoin, similar story. So this is all of the major cryptos active since 2017. You can see most of them are somewhere, the range is between 0.25 to 0.75 if I'm not mistaken, and then the major ones such as Bitcoin and ETH are kind of in the neutral territory. If we were to look at the peak value estimation of top 100 cryptos, how they are doing in a composite risk between 0 and 1, where 0 indicates a cool off in a risk off environment and 1 is like maximum risk. This is analysis from 2021. This bull run again, the 2024-2025 bull run, the highest the market cycle went in terms of the composite risk was 0.6 in December 2024, not in the high risk territory. So that's one reason being that most of the altcoins did not do that great in this bull run. And right now, if we look at the risk is coming in at somewhere close to 27%. That is again, that's again, if you multiply this number by 100, that's where you get bull market completion. For context, in 2021 in May, the risk levels were close to 0.95 or 0.99 at one point. That's where the 100% completion comes. And again, in November 2021, yet again close to that 0.9. This time around, the first iteration was in December, where risk levels went to 0.6, again averaging in it out. And in September, between September to October 2025, between 0.4 and 0.5 risk. Now, if we look at Bitcoin and ETH, how they are doing on their own 20-week simple moving average price based normalized risk between 0 and 1. This chart helps identify what is happening in the market at a larger scale, because together Bitcoin and ETH again control somewhere close to 70%. So right now Bitcoin market share is to 58% or dominance, and ETH is at around 12%. So adding those two numbers, it's almost 70%, slightly over 70% of the entire crypto asset class. And whatever these two cryptos are doing, the rest usually are heavily correlated, if not in the short term, over a month to 2 months scenario. If most of the cryptos do move in line with what Bitcoin and ETH are doing. So this chart helped identify that ETH risk was elevated in August 2025 when ETH went close to that 5k level. If you look at over here, this is August, where August 18th, week of August 18th, and again over here coming back to that August time period, the 0.86 risk was a kind of a signal for ETH to cool off. From that point, ETH risk went to 0.15. Now from in November, now it has recovered to 0.25. If we were to look at any potential DCA opportunities, and when both Bitcoin and ETH is below 0.2 risk, like it was in late December 2021, early January 2022, also in June 2022 when ETH risk was essentially zero, when ETH went for the first time below $1,000 again in June 2022 over here, less than $900. Similarly, in October, November 2022, again, the risk came close to 0.2, not quite at that 0.2 level, August 2024, and yet April 2025. If we look at those levels from Bitcoin and ETH perspective, August 2024 and April 2025, from ETH perspective, they were at range lows. And also Bitcoin in August 2024 was reeling at the series of lower lows, and in April 2025, somewhere April to May 2025, in this area of support at around 80k. So again, this particular model, again, if you want to tune out some of the noise in the asset class, these models do help. All of these models are available for free. They are personally developed by me. Again, not financial advice, and it's all of them are live models, and it took a lot of effort to create and maintain this website for the community. So if you like this content, please give a like and subscribe to stay updated. The year-to-date ROI for Bitcoin has left a lot to be desired. This is in 2025 Bitcoin. From the yearly open, now Bitcoin is negative 0.2%. For context, in the last post-halving year, that is in 2021, the same time in last 2020, December 11th, if we compare December 11th of this year with December 11th of 2021, the ROI at that point was positive 68%. This time is negative 2%. So slightly different. And if you were to see in 2021, Bitcoin never had a negative day. The lowest it went was in middle of July drop of 2021. Where the ROI was positive 1.5%. This time around, there were three distinct times where, again, in March, negative 16% ROI, April, negative 19% ROI, and now in November, negative 10% ROI. So this is a very different post-halving year for the asset class than 2021. Again, even if you look at from the lens of Bitcoin, and again, if Bitcoin is doing so badly, you could imagine the difference between 2021 ETH and 2025 ETH, again, barely visible. The moves in 2021 at this point was up about 400%. This time, again, ETH is positive. Oh, sorry, this is 2024. This time ETH is negative, but not as negative as it was early on in the year, negative 50%. Now it's negative 3.5%. So this is again, and at the same time in 2021, when ETH was negative 50% in 2025, the same time in 2021 it was positive 400 to at one point at around 470% in May, and this time around it was negative 45%. So this is again one way to highlight the differences between the bull market of 2021 versus today. These kind of analytics again present and again coming to the individual crypto analysis from the risk-based perspective. We do have three models: the time-weighted average price model, let's say this is for Bitcoin; the DCA model, which is again a regression-based dollar cost average scenario, which is this is linear regression-based analysis for Bitcoin and also for ETH; where fair value is estimated using regression based principles, where DCA below the fair value makes some amount of sense. If you were to overlay all of these individual models and come up with what could be an estimated bull run target for Bitcoin if there were a resurge in the market in let's say late December, early January 2026, the base peak is at around, forecasted is at around 150k per confluence of all of these individual risk-based models. Similarly for ETH, the base peak estimation is at around $5,400 again, which is about 1.75x away from the current price. If you were to look for any machine learning based forecast, this is a seasonal ARMA based extrapolation of what the price could be doing using standard deviation based confidence levels. In mid January 2026, price could go as high as about 110k per this model without a significant euphoria. With significant euphoria, price could go at a weekly average of about $126,000 for BTC. For ETH, similarly, the non-euphoria target in mid-Jan 2026 is 4,000 at a weekly average, whereas with euphoria is at around 4,900, roughly speaking $5,000, because these are weekly averages. So again, you can see the difference between the price peak, which was at around $5,000, and the weekly average for that week was at around $4,500. So about a 10% margin. With that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.